Good morning, everyone. Today, I'm excited to walk you through a game-changing policy that's set to reshape Nigeria's tax landscape, the Tax Reform Act 2025. Whether you're an individual, a small business owner, a corporate leader, or part of a multinational company, these changes will touch nearly every aspect of how taxes work in Nigeria. Let's dive in step by step. First off, let's talk about the big picture goal. This act isn't just about tweaking numbers. It's designed to modernize Nigeria's tax system, boost tax revenue in a fair way, and lighten the load for small businesses, all while creating clearer rules for everyone. And one of the first things you'll notice is a name change. The Federal Inland Revenue Service is now officially the Nigeria Revenue Service. It's a small shift, but it signals a fresh start for tax administration here. Next, let's break down the key changes for businesses, because this is where a lot of the action is. For small and medium-sized enterprises, there's huge good news. The tax exemption threshold has jumped from 25 million naira to 100 million naira in annual turnover. That means more small and medium enterprises can keep their hard-earned money to reinvest and grow. On the flip side, multinational companies operating in Nigeria will now face a 15% minimum effective tax rate. This is to ensure larger players contribute their fair share. If your business invests in research and development, listen up. You can deduct up to 5% of your turnover for qualifying R&D expenses. That's a direct incentive to innovate and push boundaries. Also, new rules mean consultants and non-resident companies will now be subject to withholding tax at source. So make sure your accounting teams are prepared for that. And for those in the fossil fuel sector, a 5% surcharge on chargeable products is coming, though the exact start date will be announced by the Minister of Finance later. Now, let's shift to personal income tax. This affects every employee in Nigeria. The biggest win for low-income earners: if you make less than 800,000 naira per annum after tax reliefs, you're fully exempt from PAYI. That's a huge relief for millions of workers. But for high earners, those making over 2 million naira monthly, get ready for a higher tax burden starting January 2026. The tax bans and reliefs have also been revamped. Gone is the old consolidated relief allowance. Instead, you'll get a rent relief of 20% of your annual rent, capped at 500,000 naira. The new tax brackets are simpler too. The first 800,000 naira of your income is taxed at 0%, the next 2.2 million naira at 15%, then 9 million naira at 18%, 13 million naira at 21%, 25 million naira at 23%, and any income above 50 million naira at 25%. Expatriates still need to pay PAYE, and non-residents will be taxed on any income earned from Nigeria, so no more loopholes there. Let's talk VAT quickly since it impacts almost every transaction. The good news, the VAT rate stays at 7.5%, no increase. But there's a useful change for businesses. If you buy assets for your taxable business activities, you can claim input VAT against output VAT. This helps reduce your overall tax bill. And for NGOs, you only pay tax on gains from activities that fall outside your stated mission, so you can focus on your core work without extra tax worries. To make this real, let's look at some payroll simulations from the newsletter. For a junior staff member with an annual salary of 7.2 million naira, PAYE goes down from 1.06 million naira to 933,792 naira a year, meaning take-home pay rises from 5.79 million naira to 5.92 million naira. For a manager earning 30 million naira a year, there's a small increase in PAYE from 5.21 million naira to 5.38 million naira, so take-home pay dips slightly from 23.35 million naira to 23.18 million naira. For a senior executive on 102 million naira a year, the change is more noticeable. PAYE jumps from 18.2 million naira to 22.08 million naira, so take-home pay falls from 78.90 million naira to 75.02 million naira. Just a note, these simulations are based on minimum statutory requirements. Now, where can you get more help? The newsletter shares some great resources. First, Deloitte has a detailed report on how the reform affects different industries. You can find the link in the original document. Second, there's an official personal income tax calculator on fiscalreforms.ng. Use it to estimate your new tax bill. In short, the Tax Reform Act 2025 is all about balance, supporting small businesses and low-income earners, while ensuring larger entities and high earners contribute fairly. It's a step toward a more modern, transparent tax system that works for everyone. But to make the most of it, you need to act. Review your financial strategies, update your compliance systems, and take advantage of the reliefs available. That's a wrap on the key points. If you have questions about how this applies to you or your business, don't hesitate to subscribe our channel to know more about HR resources.